Welcome to the Move IQ podcast and First Home Focus series, where we share advice and guidance if you, like many, are an aspiring first-time buyer. Now, before you apply for a mortgage, preparation is absolutely key. From saving for a deposit and maintaining a good credit score to gathering the right documentation, planning ahead can significantly boost your chances of getting approved. And today, I'm joined by Andy from Skipton Building Society to explore what lenders are looking for from mortgage applicants. Andy, can we start by talking about credit score and financial position and get your perspectives and thoughts on both of those?
Sure. So it's really important in the respect of most individuals probably have never looked at their credit file. It's the starting point, I would always say.
Yeah.
Go online, you can get a free to download anyway, your credit report. There may be fees involved afterwards, but for a set period it is free. Have a look at it. See how you're scoring, see what your credit history is like. Lenders will look at this as part of their decision making. So they will see what type of individual you are, how responsible you've been with your borrowing, your financial history. Bear in mind that obviously, whilst they are looking at this, there's other factors that come into play. So obviously being on the electoral roll would help, evidence your income and so on and so forth. But
So that rating is constantly being assessed
Absolutely.
by the powers that be?
Yes.
So you don't know what information they've got or don't have?
No. And it's a good point, a good starting point for any buyer that's out there thinking of moving into this buying process. Take a look at it. The other thing to be aware of is also if there is any issues with it, at least you've got time to fix it before you go and apply. So things like CCJs or defaults or missed payments, etc.
So if there's something on there that's not accurate, you need to resolve it.
Yes, you do. And you need to resolve it ideally before you apply, but also check that it is correct. It may be wrong information that's on there. So always have a look and review it.
And thereby, I guess it stands to reason the problem is if you don't check it, you apply for a mortgage, the lender checks it, and it's not accurate, that will count against you.
Yes. So effectively what it could mean is a decline. So if there is an issue with the credit report or it's not meeting satisfactory requirements from a lender's perspective, it may cause a decline, which at that stage, you may have wasted a month, 2 months going out looking, etc. So it's better to start from the beginning and check your credit file.
And what practical steps can people make to improve their credit score?
So a few good tips. Obviously, one is looking at it, checking where you are.
Yeah.
Secondly would be the lender would look at the way that you're managing your finances. So a good tip is if you've got a credit card, use it, but use it responsibly. In other words, fill up your car with fuel. Go pay for the weekly or monthly shopping on it, but ensure that you're clearing it off at the end of every month.
So it's actually the fact that you're using it and clearing it, that's going to be really good news.
Yeah, absolutely, because it's showing that you're responsible.
So actually it's better to have one and use it than not have one at all.
Yeah.
Is that what we're saying?
Yeah, exactly that.
Yeah.
I mean, lenders can also look at it from a different perspective. If you've got an account that's dormant or non-active, you're not using credit cards, it can be detrimental to you. But if you've got a credit card, use it, but use it sensibly.
And how does the size of your deposit affect your mortgage options and indeed the rates that you can borrow money at?
So it will affect it from a point of view of what rate you can have a look at. So in other words, the more deposit you can put down, the better the interest rate usually is. However, that doesn't necessarily mean it's the best rate for you because there may be fees associated with it that may, let's say, not be most cost effective overall for you.
So there's a lot of moving parts, there's a lot of variables to think about.
Yeah, there are.
Which I guess is why you need a bit of help. Or
yes.
Help can be advantageous.
Without a doubt. So I would always recommend, obviously, speak to an advisor. They will talk you through this. If you've got any hesitation or you're unsure of this, they will be able to lay everything out for you nice and easily and simply and walk you through the process.
Because every borrower's situation is different.
Yeah.
And it's unique to them and what they're trying to achieve and where they are in life. And it's actually important that somebody knows the full package.
Yeah, and I think that's the important part of it, that they need to be upfront with this from the beginning, so that as you said, everybody's situation is slightly different. Everyone's unique with their situation or their circumstances, but it doesn't mean that you can't get a mortgage. It just means that different approaches may need to be taken.
And therefore, it stands to reason you've got to be truthful. Exactly. There's no point.
No, there's no way. No. That's a huge thing. Just don't lie. Be honest and upfront from the beginning. And I think that if you do that from the outset, if you are speaking to an advisor, they'll be able to kind of put you on the right route to either recovery or to the right path to get a mortgage.
Just turning to deposits for a minute, if we can. Lenders always want to know the origin of the deposit,
Yes.
where it comes from. Why is that so important?
So the main thing, I suppose the way that the lenders would look at this is to see the source of the funds. That's the most important part. So due to money laundering, they need to make sure that there's no illegal activities for the way that these funds have been accumulated. So they will ask you for up to 6 months potentially of bank statements from the donors, the funds being transferred into the account if it's from abroad, for example, or if it's gifted, they may ask you from the mum, dad, whoever's gifted it, to show their bank statements as well.
So they really go into the detail. I guess so they should, because it protects people.
Yeah, exactly that.
Yeah. Regarding affordability assessments, what do they actually entail?
So I suppose the clue's in the title here, right? You find out how much you could afford. So in other words, how much you could actually borrow. So from a lender's point of view, or if an applicant goes to a lender to go through this process, it will tend to happen in the first meeting or second meeting if you've gone through an advisor as well. But what they will do is outline with your outgoings, your incoming. So outgoings, let's go through them. It will be your commitments that you've got, credit cards, loans, hire purchase agreements versus your income. So what you're actually earning. And then it will give you a figure to say, based on the term of this mortgage, based on the rate that you're looking at, this is what we're most likely to give you based on full assessment.
And if a first-time borrower is about to go through this, have you got any suggestions on how to prepare for that assessment?
Yeah, it depends how far back we go with it. So the first thing I'd say is be diligent. If you know you're getting into this process of buying a property, start early. So in other words, be diligent with your finances. Don't go too crazy taking on new debt if it's not necessary.
Yeah.
If you have any existing commitments, if you can pay them off before going and starting this process, you'll be all the better for it, because it'll be more disposable income available for you to buy or to borrow more money.
Got it, it makes sense. And when it comes to the actual application, what documents are they going to need to hand over?
Sure. So the standard documents are always photo ID, so passport, driving license, proof of address such as a utility bill, got to be dated within the last 3 months. If they're employed, 3 latest months bank statements along with latest 3 months pay slips.
And if they're self-employed?
Self-employed will be, if it's a limited company, 2 years accounts. Sole trader, 2 years SA 302s with tax year overviews. Both would also have to get 3 months business bank statements.
So there's a lot of paperwork to gather, but actually, if you're using a broker or working with a broker, they can help you through that.
Yeah.
The better information that you have, the clearer the process, the happier the process, the smoother the process, and indeed the better mortgage.
Exactly. And also at the end of this, you want the right advice. So if you're going, then you're being transparent from the beginning and you're evidencing everything that you've got, including commitments. The advisor you're speaking to would be able to, one, advise you on the correct product, the right lender that best suits you as well.
How do the brokers make their fee? Because there's kind of different schools of thought.
Yeah, there is. The one thing that they have to be is transparent in the way that they actually make their fee. So some broker firms will charge a fee, some will not. But obviously when you go to your first meeting or you pick up the phone to speak to a broker, you can ask, feel free and comfortable to do so, because it's something they will talk about as well.
So if you pay them a fee, that's really clear.
Yeah.
You know what you're paying them. But if they're getting their fee from the lender, would they have as much breadth of choice of lenders for you?
Yeah, it wouldn't make a difference of the access from that point of view. If as long as they're whole of market, they have access to all the lenders from that point of view to research what products are available. Yes, brokers get paid directly from a proc fee, effectively it's called, directly from a lender, but some will charge a fee up front because it is a lot of work as well what they do. Some don't. It's purely down to choice.
Okay. From a lender's perspective, are there benefits when an individual is using an intermediary, a broker?
If I'm honest, no, not really. From a lender's perspective, they're quite happy if an applicant goes direct or goes via broker. The difference though would be is obviously if you are going by a broker, they may have access to some exclusive deals if the timing's right. They may be able to assist you if there's a problem with your application, and they'll be effectively what they are, an intermediary between yourself and the lender, and not just that, the solicitors, the estate agents and everything else.
Okay, so you're a big fan?
Big fan.
It sounds like everybody is, both the individual, the borrower, and the lender.
Yeah, they are. They like it because it's a one-stop shop effectively. So everything is coming in from one side from the applicant, would go via the broker would look after the rest for the applicant. So it takes pressure off from that respect. And from a lender's perspective, again, as I said at the beginning, there isn't real favoritism from choosing or going via a broker channel, but for a first-time buyer, it may be worth it because they're going into the unknown.
Would you say there are sort of common mistakes that first-time buyers make through the application process? Are there things that you see people get wrong time and time again?
Good question. And I think it's more about being honest and understanding what the questions are actually asking them. So the one thing I would suggest is, if they are going to do it themselves and process application themselves, is get all your information out from the outset, know what your monthly outgoings are, know what your commitments are, know what the balances are, know what your income is, and more importantly, how the income is used by the lender.
Okay.
So this is probably the biggest point. So where it comes as an example for bonuses or overtimes, how does each lender look at it?
It is daunting because
it's
a big decision, and it's one that you absolutely want to get right. And life doesn't stand still.
Yeah.
Things change
Yeah.
in your life, in the bank's life, in the interest rates.
Yeah.
What you're saying is, do your due diligence, take advice, research the market,
Yeah.
be prepared, and get out there, and everyone's done it before you, so it's not impossible.
Exactly. You're not the first, you won't be the last, but just good research, start early, speak to the right people, and go from there.
Great. Thanks, Andy.
Thank you.
Thanks for joining us on this episode of Move IQ's First Home Focus podcast. We hope you found our tips and advice helpful. And remember, home ownership may be closer than you think, and we are here to support you every step of the way. So please don't forget to subscribe, rate and review our podcast so you never miss an episode. Until next time.